It's time now for the 360 round. For that, let's bring in our panel to discuss Alibaba. They beat earnings expectation, had success with their new AI agent, Qwen. Lots to talk about here. Joining us now, Stacy, economic strategist and wealth manager at Scarlet Oak Financial, and Natascha Willans, partner and associate portfolio manager at ABS Global Investments. Thank you both for being with us. I'd love to just start, Natascha, with you first on your overall takeaways from the earnings report.
Thank you for having me. It's a pleasure to be here. Looking at the earnings report, I would say that, revenues outpaced expectations, nearly 35 billion in the September quarter. Net profits did fall 53%, and that reflects a more intensive competitive dynamic that we've seen there, a still weak consumer, and also the mounting costs of AI. The real focus was really on AI and the cloud infrastructure business, which had better than expected data, up 34%. And that's really where all eyes are. And from executives, we keep on hearing that they'll be investing free cash flow into future innovation of AI. And it's really showing that Alibaba is taking a transformational step in their business.
And Francis, coming over to you, Natascha just mentioned that we saw that massive jump in the revenue, up 34%, I think it was, in their cloud revenue. But we saw the shares pop first when we got these numbers. Now we're starting to see a pullback. What do you think is driving that reversal? Is it profit taking, or is it something more broad in the market sentiment, or was it something else in the report that stuck out to you?
Well, just generally speaking, they missed on earnings per share. So when you look under the hood, it really, the 4% pop before the market opened was really based on, it's just AI CapEx spending, right? They're increasing their CapEx spending, their free cash flow actually went down. And so when you kind of look underneath that, that's the bet that they're taking. Well, then that takes you right over to the narrative about AI CapEx. Is it sustainable? What's going to occur with that? And basically, counting on, cloud revenues to kind of carry the costs of everything else. They had increased costs around instant commerce. And so they were able to grow that business, but it had a cost to it. So when you look under the hood, 34% is very impressive, and it certainly surprised to the upside. Again, we're betting on the AI CapEx spending, and, people like Michael Burry are starting to call that into question, and we're starting to see the technicals showing us a third lower high on this. So,
and Natascha, you just said that you think Alibaba is undergoing a strategic transformation. What do you think is at the core of that shift? And how is this different from the Alibaba that we knew 1 or 2 years ago?
Yeah, absolutely. It's definitely going through a major strategic transformation. It's shifting from being a more traditional e-commerce-led model toward an AI-first, cloud-driven technology company. It's investing heavily in AI infrastructure, as we were just talking about, committing more than 50 billion over the next 3 years to expand cloud capacity, computing power, and in-house chip development. We've seen Alibaba revamp their AI strategy with the relaunch of Qwen, and then just really building that end-to-end AI ecosystem, everything from developing chips, strengthening the global cloud data centers, and integrating AI across commerce, logistics. And this effort really sits within China's broader push to build a self-sufficient AI supply chain, one increasingly insulated from the US. And Alibaba is really positioning itself at the center of that. So this shift really positions Alibaba for higher margins, scalable growth, and reinforces a competitive moat, a potential competitive moat against both Chinese and global tech rivals. Obviously, there's this is beginning stages. There's a lot more to see, and we're going to continue monitoring it.
And Francis, you sent over some technical notes in the notes that you sent before our conversation. I'd love to get your technical perspective here. You flagged that we've got a third lower high. We're still trading below that 50-day moving average. As far as these levels that you're keeping an eye on, what does Alibaba need to break out of this bearish pattern?
Right. So you have the October 29 high around 180, and you have the October 2nd high around 190. So, trading in at 157 right now. We've got a ways to go before you're going to put a bullish pattern back in there. And I think that basically, that's going to be based on a global macro story around AI than it is on the success, the short-term and long-term success of Baba's sort of intentions around this shift around their business model. And it's also going to be based on, Trump has, I think the Senate came out this morning and said he's got 4 meetings with Xi next year. And the US and China are decoupling. And so how that works out for China, how that works out for the US is going to affect the BABA share price. So in the interim, it's just got to get above that 50-day moving average in order to have any real upside momentum. And at a time when tech and AI is being questioned, globally. So that's its challenge.
And Natascha, you mentioned Quen in your last answer. Quen could obviously be a big driver here to help get over some of those important levels that Francis was just mentioning. We saw Quen's adoption, just those first week numbers, really impressive coming out. What makes Quen and Alibaba's end-to-end AI ecosystem unique compared to what we have here in the U.S. and also what some of its Chinese competitors have that could potentially give it the edge it needs to move into a more bullish pattern?
Yeah, that's a great question. So I'd say there are three advantages that we see a lot of these Chinese AI models having. The first is efficiency. These systems are generally more cost efficient. They're built on a tech ecosystem optimized for scale and affordability, and that makes a big difference. The second one I'd say is energy. While the US AI models are generally ahead in terms of China's, in terms of development of the AI models, China is ahead in terms of the energy involved in getting to the next step. They've made massive investments in solar, hydro, and other forms of renewable energy over the past 15 to 20 years. And that's somewhere where the US is lagging and is going to play catch up for the next leg there. And then finally, just commercializing AI. I think the US companies are more focused on improving models, increasing compute power. Chinese companies tend to be very good at commercializing AI apps. You have to remember that China has an enormous domestic user base that gives developers instant scale, rapid feedback loops, and the ability to iterate products very quickly. So those are some advantages that we see in the Chinese AI model space.
Well, we appreciate you both being with us to talk through Alibaba's earnings and some of the technicals here and also the success of Quen. They announced that in its first week, it had 10 million downloads after its public launch. That's Francis Stacy, the economic strategist, wealth manager at Scarlet Oak Financial, and Natascha Willans, the partner and associate portfolio manager at ABS Global Investment.